This is the week of September 7th, the Labor Day shortened week, so we will have 4 trading days, Tuesday through Friday. And I want to talk this morning about volume, but before that I wanted to take another look at the S&P 500. Volatility is continuing in this marketplace, and we can't seem to find steady footing yet going forward. Over the last month, the S&P 500 is down 7.5%. And when I say the last month, I mean the last 21 trading sessions. And at 1921, the S&P 500 is not far. It's 60 points, 3% away from a 52-week low, which it really tested back on August 25th. And quite frankly, it could test that this week. Again, it's not far away. And I want to talk about this week because one of the things I'm keeping my eye on this week is share volume. And I'm moving over to this tab now to talk about share volume. This is a one-year chart of daily share volume. That's shares bought and sold in a single day in the entire S&P 500. And over the past year, in a single day, we average about a 3.5 billion share volume. However, over the last month, thanks to the volatility, I believe, we're at a 4 billion share per day clip. And that's pretty substantial considering that's 21 trading sessions where you're about 15% over that average. And while it's not a hard and fast rule for high volume trading to correlate with volatility, I tend to follow that practice. Now, as you can see over the past week, we have seen a bit of a decline from the monthly average in terms of share volume. And I even put in here the last 5 trading sessions and how things kind of wrapped up. This last day here on Friday is a misnomer because really you had a lot of folks leaving for the holiday weekend, and so volumes are going to be relatively light in front of a 3-day weekend or a 4-day weekend because traders are going to be taking extended time off. I would not be surprised if that occurs again on Tuesday. However, I'm actually looking for the entire week to be on relatively low volume, not just because of the holiday, but also because of the fact that we really don't have any catalysts going on in the market right now. The Federal Reserve doesn't meet until next week. People are getting a little freaked out over what the Federal Reserve may do. I've written a piece on Seeking Alpha. I will link it in this video when it does come out in regards to the Federal Reserve and this fear and how it's very unfounded. But that's not until next week, the Fed statement. So really the Fed can't do anything this week. And the other piece of this would be earnings. If we had a lot of earnings reports, it could be a significant week. However, we have all but 28 of the S&P 500 companies have reported earnings already. Therefore, and these 28 companies are going to report over the next month, so we're looking at maybe seeing 10 earnings reports or 15 earnings reports at most this week. So earnings isn't going to move this market much. Therefore, I'm kind of banking on lower volume and less fluctuation in the market and hopefully lower volatility as a result. To follow up on my video from last week, I have taken a short position against the VIX, and I do have the ability, I dedicate an amount of money and I incrementally short. I'm about 50% in to what I've dedicated to short, and so if the market does become more volatile this week, depending on the reasoning, I may increase that position. However, I'm expecting to hold that position and hopefully volatility will slowly decline. That's all I really have for this week, so hope you have a good week. Feel free to comment, and best of luck investing.